there were additional policies drafted, and those policies have effects on what we have as the current tax laws and the amendments to date. So what I'm going to do now is I will transfer I'll transfer my mic to Mr. Obina, and he's going to be taking over to talk about the tax policy of 2017 and how it flows down to the kind of taxes that we have now from 2019 and 2020 Finance Act. So thank you for listening to my humble presentation. I hope you're able to get value from it. So I guess we'll take questions and answers after Obina has presented the slides. So thank you very much.
Okay, thank you, Mr. Idris, for a wonderful session. I hope at least we've learned one or two things from the slides. Some key terminologies have been defined. Some things have been distinguished. That's between tax in general, revenue in general, and taxation. So we'll take questions and answer after my own presentation. So I will share my slide with you in a moment. So we'll be looking at mainly as we said, the national tax policy, and looking at if there's a policy shift from what we have in 2012 compared to what we have in 2017. That's the revised national tax policy. And you will agree with me that in 2020, we had a budget in 2020, and there's a budget of 2021. And of course, you also know that in 2020, the budget was about 10.59 trillion for the Federation. And we have in 2021 budget to be about 13.6 trillion or thereabouts. And you can see that the budget has increased by more than 2 trillion. And of course, you will now see that with an increase in budget, there's now what we call a finance, bill, which metamorphosed into a finance act in order to support the increased amount in the budget. So that means that most of what we see as we call finance act is what we call tax planning. But this tax planning is from the perspective of the government. And if you see that generally, what we see at the macroeconomic sector is that, the income revenue generated from crude oil is going down due to the global world issues. And we see that, okay, someone is raising a hand. Messi, you have a question? Messi, you raised your hand. Please let me allow Messi to say one or two things. You can go ahead. Messi? Okay, maybe after the session. Please, am I audible? Okay.
I can hear you, sir.
Okay, yeah, okay. Yeah, welcome. Okay, that's
all right, sir.
Okay, so I'm admitting others into the class. Okay, so as we've seen that the macroeconomic variable in terms of the price of crude oil has gone down due to production of electric cars and the use of green energy, pushing green energy as against fossil energy. So the price of crude oil has come down. Governments now have to resort into taxation to finance the budget. Okay, government have to use taxation to finance the budget. So now government is looking inwards into getting money through taxation. And what happens is that when the budget increased from 10 trillion to about 13 trillion with additional 2 trillion, that tells you that government will bring out policy that will kind of increase revenue generation. That means that someone will have to pay more as tax, or more people will need to come into the tax brackets to pay tax so that government can finance its budget. So the essence of this information is that you should know that the government will be more aggressive as the budget increases. That means you should be able to advise or position your clients in such a way that you can protect your clients, because there's a temptation that they may want to overtax your client as well because of the drive to generate money to finance the budget. Okay, so tax policy is the first part of tax planning when it comes to revenue generation by the government. And you will see that the focus the focus of tax policy has moved from encouraging foreign direct investment in 2012 into supporting small and medium scale industry and domestic investments in 2017. And one of the key objectives of this class is to understand, have a short background of the tax policy, which my colleague Idris has done justice to, and also to understand the objective of tax policy, which of course will give you the tax direction of the company and also of the country, and also to understand the role of taxation for tool for economic management, and of course to know who are part of the Nigerian tax system. So the major stakeholder in the Nigerian tax system. So the tax policy is just basically the philosophy, a document that guides the general the tax system in terms of the focus of the government. Tomorrow, the tax policy could be to encourage the digital asset, digital or capital market. The tax policy tomorrow could be to encourage new industry, like probably exports of a particular product. Probably we are looking at agriculture to encourage agricultural exports in Nigeria, to make agriculture the key aspect of revenue generation instead of the crude oil that we currently have. So the tax policy is those kind of discussion that comes before the tax law comes out. The tax law comes into play. And what we've seen when the former chief was there, the former chairman of FIRS was there, was that there was no strong alignment. That's in 2012 tax, there was no strong alignment between the tax law and the tax policy as at that time. So there was no strong alignment between the tax law and the tax policy. So when we had the 2012 tax policy, it was there as a policy document to encourage foreign direct investment. But if you look at the tax law were still kind of rigid. The tax law, for you to even get some incentives in the tax law, you go through a lot of process. Probably you want to get pioneer status incentives, you need to apply to inspectorate, the National Industrial Development, the National Industrial Development Council, that's National Investment Promotion Council, for you to get your pioneer status, and you have to show justification for the that you need this pioneer status. Okay, so it was, the laws were there, but to tap into the incentives or the benefit in the tax law were kind of rigid. And even at that, we also see a lot of issue when it comes to compliance burden. For even as of 2012, we noticed that one of the key objectives was also to reduce the compliance burden for small and medium scale enterprise then. But the VAT law also, as the VAT Act, mandates SMEs to file return. Okay, all SMEs to file return on a monthly basis. Even if you are very small, you don't have the capacity to even file return. And as at that time, we also have issue of anybody is allowed to charge VAT. Even if you are small and you don't have structure, you charge VAT. If you do not charge VAT, it therefore means that you are exposed to penalty for not charging VAT. You're exposed to that. So basically, we had a lot of conflict between the tax law and the tax policy. There was this conflict there. So it was quite challenging it was quite challenging as at that time. So, however, we are beginning to see changes from the revised tax policy that we have in 20.